Okay, I think we're good to go here. I just need a quick second. Let this thing load up. Get it started. All right, everybody. So good stuff. I think we're good now. So welcome everybody. We're giving you a welcome here to the Benzinga Option School demo. We're gonna have it live here with Chris Capri. I'm gonna show you the live class that we're going over today. So you are gonna be part of the live class. Chris will not be able to actually see the comments because he's gonna be in the live demo. But I know he asked, well, he's got the whole session going on. I just want to let everybody know here. Number one, welcome. My name is Rodrigo. Very nice to meet you guys. And basically today, I'm going to show you a live class that we have because we have a live class in the Benzinga Option School. We have about 8 different chapters and we go over them in the live sessions where everybody can, ask questions, trade ideas, all that other stuff. So I think everybody's good to go. I just need to do one last thing here, make sure everything's working to get the session up. Okay, chapters. All right, I think we're good now. So let's go ahead and carry on with the class. Welcome everybody, by the way. So if you do want to join, all right, before I get into this, because you guys will ask me in the middle of the session, but if you do want to join the Benzinga Option School, we do have a 7-day trial. It's $7, $7 for 7 days. After the 7 days, if you want to keep it, it's $14.97. And if you want to join, the link is in the description on YouTube, but I'll post it in the chat for you guys. And if anybody has questions, just reach out there. We have an email there where you can email me or call if you need me. All right, so let's get this going. Let's get the session going live. So this is the platform.
Our chart, right? That over this series.
So this is the platform. And then if you want to go to the live class, you click live. If you want to watch the recordings of the prior live classes, you click video library. If you want to go to the live trading rooms that we have there, where Chris Capri's posting entries, exits, all that sort of stuff, student trade ideas, questions for Chris, all that stuff. You have that. That's 24/7 open, never closes. So, and you get Benzinga Pro, which you know what it is, right? You click there, it takes you to Pro. You have your market research terminal. Check out the stocks you're looking at, whatever it is, right? All right, let's get on with the class here, the live session.
Exposure based upon this volume. Now, we may be wrong that, there isn't a short-term bottom in here and it may go lower. And if it does go lower, then we're going to look for a move into kind of this area. So let's get rid of this. Good to see you, Rodrigo. So if this does dip lower than this, then we'll start to look to accumulate positions in this area. Probably add a little bit more on a dip here and then a little bit more on a dip here. So that's pretty much it. We like the intraday charts on this. We felt that this was a nice, impulsive corrective structure here on good volume. And so we've already added a little bit of share size right now. We'll wait a little bit, let it pop a little bit higher, then sell some calls on that. So that is pretty much it. Any questions on the UNG long share position that we've taken? So any questions on that? Give me a 10 in the chat if there's no questions. Give me a 5 in the chat if there is, and if there is, post your question. Danik says, big fire in Nat Gas Factory yesterday, yes, and they're shutting down the terminal for 3 weeks. So that's going to put, medium term, that's going to put some pressure on it. Yeah. Short term bearish, but medium term, that'll put some pressure on it because supplies will be limited. So, yeah. Yeah. That would explain the big surge in volume that we had there. Isaac, good to see you. Hope you're well. Okay, sweet. So Israel, good to see you as well. So, all right, sweet. So with that being said, that explains the UNG position we just had. Let this pop a little bit, sell some calls against that. Sean saying on top of that, the Kremlin said they're not planning to cut more EU countries from gas. Yeah, which is why we want long energy and long commodity exposure. We already have some long commodity exposure through DBC, which is a broad base of commodities. And that has continued to go well. We bought in 27, 28 range. And so that has continued to go well for us for now. We'll keep selling calls against DBC position, our long share position on that. We definitely want to continue to add more and more exposure to energy. So UNG gives us some natural gas exposure. Oxy gives us some oil exposure. DBC has exposure to a broad range of commodities, not just oil and gas, not just industrial, metals and materials, but also agriculture. We want broad exposure to agriculture going through the summer. We think this is going to be probably a very warm summer. There's going to be a lot of energy demands. There's some weather forecasting that hurricane season could be quite interesting. That will put more pressure on commodities and energy. On top of it, the snowpack levels in California this year were quite low. I know because I live in Lake Tahoe. So, and you got to remember that the Sierra Nevada mountains, which is Lake Tahoe, provides, and the mountains in that region provide 2/3 of the water supply for the year for California's water. So if that snowpack is low, then the supplies are going to be low. So yeah. Okay. So with that being said, no questions on that. So we covered that. Our SPY strangle. So this one closed for a max profit on that one there. That was a 1.11 credit on that. So we had the 418. We had the 418. We were short the call at 418, and we were short the put. I think it was 405. Short the put at 405. That expired yesterday. So in the aftermarket, we didn't hit any of those strikes. So we got full credit for that. Sean says, close my SPY 415 puts. Thanks for that. You're welcome, good sir. Hopefully you did well on that. We're thinking about potentially opening another strangle, but we need a little bit more credit on that. And we kind of want to let things play a little bit. We can't do SPY strangles today because SPY only has expiry Monday, Wednesday, Friday. But we can do a SPX strangle for today possibly. So we'll see on that. But we think the SPX range probably holds. So we had said we forecasted a move about 1.55% up and down. 1.55% on SPX from the market open is about 65 points. So that would mean 4170 to the upside, which we think is a less than, 40 closing above 4170. We think that's less than like a 5%, less than 5% chance. The downside is a little bit more vulnerable. Why is that? So let's kind of talk about option positioning right now and why the downside is a little more vulnerable. So the way it looks in terms of positioning is like this. So below 4080, there's virtually no calls in SPX. Now, there is some tail risk protection. There's a fair chunk of options at the 4,000 strike, but below 4080, it's pretty thin. There's a little bit of a pop in positions here, but it's very little thin, which means that prices have a chance to be somewhat fluid. So the max concentration of puts right now on SPX is at the 4,000 strike. There's decent concentrations of puts at 4,100, but in between here, very thin. So that allows the markets to be fluid through there because it doesn't have to fight through a lot of that open interest. On the call side, we see something that's a little bit more different. We see 4,100 as pretty significant, and the open interest actually increases all the way up to 4,200. Now below 4,200, it gets a little thin, and then there's a big, a decent amount at 4,300. But then after that, there's just nothing. So if the CPI does start to come in, in a way where it starts to kick up some volatility, and we think that's the first time, we think very little volatility on the day today. But if the CPI does start to kick up some volatility, then we think a max move to the upside would be 4,300. And a max move to the downside would be 4,000. So that's kind of what we're seeing on SPX. Now, with that being said, we're a little hesitant to try and sell put spreads below 40.75 because if it does break this, it could sell off pretty materially. But we are open to selling some call spreads on the day on SPX. So we may start to look at maybe like a 40.50, 40.60, 41.50, 41.60 or something like that on the day. Remember, SPX has expiries 5 days a week. SPYs is only Monday, Wednesday, Friday. So that does allow us on these off days, Tuesday and Thursday, to do plays on SPX if we want to. Dan saying CPI data tomorrow. Yeah, we mentioned that in the market commentary, which means that we can do options today on SPX that expire today. We can do 0 days to expiration options on this right now. So that allow us to take advantage of moves in the SPX, and that'll be expiring today. So yeah. So in terms of our strangle for SPYs, we closed that for max profit, and we now have our long UNG shares, so we've added to that position. So that's pretty much it at this point. We thinned this one out because we just didn't like how it was forming. So if we don't like, if our reason for getting in the trade is being invalidated, then we get out of it, regardless of whether it hits our stop loss. And we felt that it wasn't playing ball the way we want to. So close our weak positions, keep our strong positions. Cut our losses small, let our winners run, which is what we've been doing. Okay, so we've covered UNG. Oxy, we're pretty close to buying some puts on this. In fact, I might be interested in buying some puts on our Oxy position. So we're long around 69, and we have some short calls on this. Oxy is starting to break down from this structural support, and we want to hold Oxy for a little bit, right? So if we want to hold Oxy, but it's starting to break down from support, do we want to just eat the losses on our long shares? No. So we can start protecting this. And so I feel like we can start protecting our long Oxy position with some long puts. There's room for Oxy to potentially go down to 63, 62. We're seeing that on our end. And so if maybe even down to 58. So if it can go down to this area right here, because we see a fair chunk of options on our end. We see a fair chunk of options around here and a decent chunk around here. So if it has room to go down this much, instead of just eating the losses on the shares, we want to hedge that. So let's see if we can get some puts on that. All right, so Oxy. So we have the long 1/3 position size at 69.22. We have our short calls, which for this Friday are going to give us full credit on that. Once this Fridays have expired worthless, then we'll resell more calls for next week. We just keep selling more and more calls, continue to collect credits on that, lower our cost basis on Oxy. So let's look at some on Oxy here. We want to buy probably for 1 month out, which would put us at the July 8th. So remember, we don't buy weekly puts. That increases our cost of hedging massively. So we want to buy about monthly puts on this. So let's say we want to buy the at the money. Let's say it's at 66, 67. Let's say we want to buy the 66. So we need to cover 3 puts to cover 300 shares. So that'd be that. And let's see if we can get a little bit better price than 375. So let's see if they give us maybe even, let's see if we can get a 370 print. And we'll just let that, there we go. Okay, so that filled. So now we have some downside protection on this. These are 45 delta trades with 4-cent gamma, very small theta on this. So we have no problem holding this over several days. If Oxy starts to roll over, we will continue to neutralize some of the risks on this. So we got those for 370. So let's make sure we put this in the ledger. Okay, our UNG position is profiting as we suspected. So we bought at 28.66. That's now in the money. All right, so sold, or just put short for some people. Short Oxy, or sorry, long, my bad. Long Oxy puts at 66 STR on July 8th EXP for 3.6. we see something that's a little bit more different. You know, we see 4,100 as pretty significant, and the open interest actually increases all the way up to 4,200. Now below 4,200, it gets a little thin, and then there's a big, you know, a decent amount at 4,300. But then after that, there's just nothing. So if the CPI does start to come in, you know, in a way where it starts to kick up some volatility, and we think that's the first time, we think very little volatility on the day today. But if the CPI does start to kick up some volatility, then we think a max move to the upside would be 4,300, and a max move to the downside would be 4,000. So that's kind of what we're seeing on SPX. Now, with that being said, we're a little hesitant to try and sell put spreads below 40.75 because if it does break this, it could sell off pretty materially. But we are open to selling some call spreads on the day on SPX. So we may start to look at maybe like a 40.50, 40.60, 41.50, 41.60 or something like that on the day. Remember, SPX has expiries 5 days a week. SPYs is only Monday, Wednesday, Friday. So that does allow us on these off days, Tuesday and Thursday, to do plays on SPX if we want to. Dan saying CPI data tomorrow. Yeah, we mentioned that in the market commentary, which means that we can do options today on SPX that expire today. We can do 0 days to expiration options on this right now. So that allow us to take advantage of moves in the SPX, and that'll be expiring today. So yeah. So in terms of our strangle for SPYs, we closed that for max profit, and we now have our long UNG shares, so we've added to that position. So that's pretty much it at this point. We thinned this one out because we just didn't like how it was forming. So if we don't like, if our reason for getting in the trade is being invalidated, then we get out of it, regardless of whether it hits our stop loss. And we felt that it wasn't playing ball the way we want to. So close our weak positions, keep our strong positions. Cut our losses small, let our winners run, which is what we've been doing. Okay, so we've covered UNG. Oxy, we're pretty close to buying some puts on this. In fact, I might be interested in buying some puts on our Oxy position. So we're long around 69, and we have some short calls on this. Oxy is starting to break down from this structural support, and we want to hold Oxy for a little bit, right? So if we want to hold Oxy, but it's starting to break down from support, do we want to just eat the losses on our long shares? No. So we can start protecting this. And so I feel like we can start protecting our long Oxy position with some long puts. There's room for Oxy to potentially go down to 63, 62. We're seeing that on our end. And so if maybe even down to 58. So if it can go down to this area right here, because we see a fair chunk of options on our end. We see a fair chunk of options around here and a decent chunk around here. So if it has room to go down this much, instead of just eating the losses on the shares, we want to hedge that. So let's see if we can get some puts on that. All right, so Oxy. So we have the long 1/3 position size at 69.22. We have our short calls, which for this Friday are going to give us full credit on that. Once this Fridays have expired worthless, then we'll resell more calls for next week. We just keep selling more and more calls, continue to collect credits on that, lower our cost basis on Oxy. So let's look at some on Oxy here. We want to buy probably for 1 month out, which would put us at the July 8th. So remember, we don't buy weekly puts. That increases our cost of hedging massively. So we want to buy about monthly puts on this. So let's say we want to buy the at the money. Let's say it's at 66, 67. Let's say we want to buy the 66. So we need to cover 3 puts to cover 300 shares. So that'd be that. And let's see if we can get a little bit better price than 375. So let's see if they give us maybe, let's see if we can get a 370 print. And we'll just let that, there we go. Okay, so that filled. So now we have some downside protection on this. These are 45 delta trades with 4 cent gamma, very small theta on this. So we have no problem holding this over several days. If Oxy starts to roll over, we will continue to neutralize some of the risks on this. So we got those for 370. So let's make sure we put this in the ledger. Okay, our UNG position is profiting as we suspected. So we bought at 28.66. That's now in the money. All right, so sold, or just put short for some people. Short Oxy, or sorry, long, my bad. Long Oxy puts at 66 STR on July 8th EXP for 3.70. Okay. So those are in the book now. So now we have some good Oxy protection should Oxy go lower. Keep in mind, again, we'll keep selling calls on this. We'll keep selling calls. So we sell the calls to help fund the puts. So that reduces our cost, and it reduces our cost basis on the share position. The UNG trade that we bought this morning, we bought at 66. And the market corrected back here. We can see that. So this is very favorable to us right now. So we're long shares on our breakout pattern right here. Breaks out on good volume, corrective pullback. And then we get a volume push on the breakout. Very good sign for us. We're expecting UNG to go a little bit higher. When we see UNG start to tire out on the intraday charts, then we're going to sell those calls. We don't want to sell the calls right off the bat, because if we think we're going to be bullish on, like if FOMC is like right here, we'll close it just before that. And at that point, we'll have gotten as much theta decay on those options as possible. Does that make sense, Jordan? Yes, no? Give me a 10 in the chat if that makes sense, Jordan. Yeah, you got to remember, if FOMC causes, an adverse move, we don't want to be a part of that. And there's not much more for us to gain. Going into the FOMC, our option expires in the afternoon. So we've pretty much collected a huge chunk of theta on that position at that point. He's saying, yes, cool stuff. Okay, glad to hear. Sean is saying, I think it's because if the rate increase will be expected, price, then we might have a small rally. Yeah, possibly. I just don't want to have a position that'll be vulnerable on the last day like that. There's just no need for us to have exposure on that when we can get the majority of our profits leading up to that. Yeah. Okay. So we've covered the Q trade. Nothing else to cover on PBR right now. We're just waiting on that with the bull call spread. The SBLK trade, we're just letting these calls run out for full profit. So right now, this is the trade that closed for full profit or max credit. And so our two current positions on SPYs is the Iron Condor, which it expires on Monday and at the after session right now. That one's in a mild profit right now. We expect to collect more and more theta as that goes on. And then we have also our bear call spread in SPYs. So that's the 420, 425s. And that's also very much like the Qs, we feel is not a vulnerable position at all. So we're short the call here, we're long the call here. We think this is like less than a 3% chance that this position goes against us. So we're just going to hold this same playbook until the morning of the FOMC, and then we'll close it, and we'll get as much credit on that as possible. So yeah, so we pretty much, sold this on this day here. We called the top on this. We said, hey, it's overextended. We haven't been able to get past that since. And every time SPYs has rallied, it's always sold off. Also on the positioning, we've said, hey, when SPYs rallies, we notice a pattern. Traders keep selling calls. Traders keep selling calls. Traders keep selling calls. That's bearish. So, and the resistance on that has been coming down. That's kind of natural to see that compression of the ranges as we get closer and closer to an event. And remember, what do we say about ranges? The longer they persist, the more the strikes start to collate around this. In the beginning, when we get into it, there could be strikes above, there can be strikes below. But as this position goes on and collates more and more, you see calls start to move towards the range, which then further compresses volatility, further solidifies the range. And while we're in the early stages of this, we want to sell volatility because volatility is still in the higher end of the range. As the range continues on, volatility starts to sell off. So that's why we try to sell strategies and sell volatility in the early stages of a range on that. So any questions on the SPY position we have, the bear call spread? Put a 10 in the chat if there's no questions. Put a 5 in the chat if there is. If there is, post your question. Tessa's saying, what calls do we go for on UNG? We haven't done any calls on UNG yet. We're waiting for it to kind of top out on the day. Remember, as calls go up, as price action goes up, calls get more and more expensive. They get charged. We haven't seen any topping pattern yet on the intraday charts, so we're going to continue to let these calls get more and more rich. A lot of beginning traders often make the mistake. They get like long shares. Like let's say they did the exact same entry that they did, so they got long shares and they want to sell calls. That's a smart thing. You do want to sell calls on your long shares position whenever you can. The problem is that beginning traders will often like get long shares on this candle and then they'll immediately sell the calls. And they don't pay attention to the price action in real time. If they're buying shares, they think the market's bullish. Maybe, they're trying to buy in a dip, but in this case, we're buying because we're bullish. So if you're buying because you're bullish and you think that it's going to go higher on the day, then you should let that price action play itself out, because the higher it goes, the more expensive those calls get. When it starts to tire and transition on the intraday charts, then we want to start selling calls, because then we've gotten the maximum value of the calls for that session. So that's what we want to do on UNG. Hence, we haven't sold the calls yet, tests on UNG, because we're waiting for the intraday price action charts to calm down, and then we'll look to sell the calls. So hopefully that answers your question on that. Okay. We've covered the SPY. We've covered the UNG position, which we've entered less than an hour ago. We're already up a couple $100 on that. And then we have our VIX. This is just our insurance ticket right here. So VIX is part directional play, but it's also part insurance on this. So yes, we of course want to profit on this trade, but we're also holding it as an insurance. Why? Because we ended up, feeling like, hey, with VIX bottoming and kind of consolidating around 24, which we'll show you in the chart soon, we felt like 24 is a short-term support. On our end, when we look at the analytics and positioning flows, we're seeing 24 is a huge concentration of puts, and the highest concentration of calls is around 30. So we wanted to buy insurance up till the FOMC in case volatility does tick up after the CPI or on Tuesday. And so if we start to see volatility ticking up, this position allows us to profit from implied volatility going up and VIX going up. If it starts to go up and we feel like, hey, volatility could get pretty strong post FOMC, then we're going to buy another set of VIX, of bullish VIX play on it. So that's why we have this. Yes, we want to make money in this, but the main intention of this is to have insurance in case implied volatility goes up. So this way it would neutralize some of our short vol positions on SPYs. So with that being said, when we look at VIX, what have we said? We said, hey, largest concentration of puts is around this 24 strike. Largest concentration of calls, which we said in this morning's market commentary, has come in around 30. So traders are starting to bracket where they're forecasting the market is going to go post FOMC or through the FOMC. We felt like 24 was a good value. Markets had compressed. And so we felt like, hey, 24 is a good value. So let's get long the calls here. And I think we have the 27? What do we have on that? Yeah, we have the 27. So with that being said, yeah, so we're long the calls at 24 and we're short the calls here. This gives us insurance in case VIX does spike from 24 to 27 between now and the FOM or pre-FOMC. So yeah, so any questions on the VIX play? Give me a 10 in the chat if there are no questions. Give me a 5 in the chat if there is, and if there is, post your question. Testing ended up paying $29.33. Okay, you got in a little bit late. Yeah, it happens. It happens. You're still in profit right now, so you're good. All right, sweet. So we've covered all our current open positions.
It's only annual. We don't have monthly. But yes, if you do want to pop into the school, we're going to post that link in the chat for everybody there on Zoom and YouTube and Twitter. In Twitter, you have it there on the Twitter space on the top. You can see it says learn how to trade options there. That's the link that's going to take you there. $7 for 7 days. After that, it's $14.97. You get a free laptop. For the people on Zoom, I'm posting the link for you there as well so that all you guys can join the school. And for all you guys that are on the YouTube side, I'm going to post that link there as well for you. All right, folks, let's get back here into the session.
For the morning, we've covered our new trade ideas. We covered our closed positions. We don't have anything else that we want to talk about right now. We may want to take a position in XLE, but we're not ready to get long yet. And so with that being said, let's talk about what we're expecting going forward, and then let's do some open Q&A. So this data point was about 4 days ago, but as of right now, this is from Goldman Sachs, they're estimating that about 3.2 trillion, I repeat, trillion in options is expiring on June 17th. That is massive. That's one of the largest expirations we've seen. Now, June 17th is a monthly OPEX. It's a quarterly OPEX. We have a VIX OPEX on the 15th, the VIX monthly OPEX on the 15th. We have FOMC on the 15th. So it's not surprising that we would see such a large buildup of positions expiring on the 17th. We have about half that happening on the morning for SPX. And then we have a little bit later in the day. But SPYs has got a decent chunk, 175 billion options in there. Decent chunk in SPX after that. Single stock, 560 billion. So we've got about 60% of this expiring in the morning and the remaining 40% expiring in the afternoon. So we are expecting a lot of not just volatility, but directional movements to start to kick up as we get closer to FOMC. CPI will be the first to kind of kick this, party off, or at least it could, but it doesn't have to come out. It could come out very benign. It could be a nothing burger, and that's fine. But it doesn't matter if CPI kicks up volatility or not. The bottom line is that we are expecting the volatility to start to increase come Tuesday with the VIX OPEX, and then Wednesday as well. So yeah, that's pretty much on that. Just 1 second. I want to message my team. Okay. All right. So just wanted to let my tech team know about something there. Okay. So that's what we're seeing on the SPX, expecting a lot of volatility and directional movement over that period. Okay. So we've covered that. Let's go into some questions for Chris. And looks like we got a few trade ideas. So let's take a look at this. Sean is saying no class today, so I pulled the trigger and bought some shares at 29.27. Drop a news having the. Okay, copy that. All right, I think you're fine for it. Wow, 32 for July 22nd. That's ballsy, Sean. That's pretty far out. How come so far out? I'm just curious. I would be okay with 32 for maybe a couple weeks out, but UNG has been pretty volatile to the upside. So, if you're willing to get out of the position at 32, then I think it's fine. You still walk with a credit. You'll make money from 29.27 up to 32. And then you get another 260 credit beyond that. That's fine. But just something to think about. I personally wouldn't want to be selling calls for the July, what is that, 5-6 weeks out? I would probably just sell weekly calls on UNG. Okay, if you're willing to close that at 32, so be it. Just 5 weeks is pretty hard to kind of want to sell calls from that. So my suggestion is if you're going to be long shares, just sell weekly calls. You're going to make more money that way. So yeah. Okay, Baghdadi has a trade idea. He wants to short ABT. So he wants to sell an iron condor in ABT 120, 115, 105, 100. Okay, let's take a look at that. Let's move this position over. It's Abbott Laboratories. Okay, so you have the 120, 115, 105, 100. Let me check on my end, just kind of look at my proprietary data and see what I'm seeing on that. Surprise fit today. Abbott had 170,000 calls and about 100,000 puts. Decent chunk, 8% rolling off on the 17th OPEX. Okay, and you wanted to sell 120, 115. Okay, so you could do this. The correct form would be 115, 120, 105, 100, but that's fine. I think you're pretty well protected. I think 120 is pretty solid resistance on this. Let's take a look at this trade in the. Let's take a look at this trade here in the actual thing. What was your expiry again? June 17th. Okay, so next Friday. Let's analyze this trade. So let's take a look at your trade here. So we're going to sell the Iron Condor 115, 120. And then I think you had the 105, 100. Let's take a look at this. The $1.56 credit. Skewed R on this one. Yeah, skewed R on this one here. So 63% chance that you make money on this, but your risk is over 2R on this. So let's run this through the calculator and see if this has positive expectancy or not. So this position is saying, okay, so this is saying you have a 50% chance of max profit at, what is that, 1560? 1560. Okay, so let's put this in the calculator here. 50% max profit, 1560. Shout out to Vin for creating the app inside the platform. Nicely done. The first of many apps to come, by the way, for Benzinga Option School members. So we're already working on the term structure app. Then I want to talk with Vin about doing the open interest app. There's a lot of apps that we got coming down the pipeline that's just going to add more and more value to this, to where you can start seeing some of the proprietary data that I'm seeing, and it'll just help you make better trades and better decisions. So we got that one right there. So let's look at the max loss on this. So max loss is 34.40, and the market is saying we have almost no chance on this side and 15% chance on this side. Okay, so 15% chance of 34.40. You might have positive expectancy on this. Yeah, you actually do. The tricky part is that's for the max win and max loss. Here's the tricky part of this, Baghdadi, and this is the tricky part, is that you have a fair amount of sliding scale. 31% of your thing is in sliding scale. So between here and here. So your risk isn't the low end. This is really where your risk is between your max gain here and your max loss. And a huge chunk of this is the losing part of the equation. So I would say at least how much? Yeah, 20%. So you probably have, right now we don't have the mathematics to calculate that. We'd have to like add in some regression analysis and some other stuff. Like when we upgrade this app over time, then maybe we can do that. But based upon your max gain and max loss, this does have positive expectancy. I'm just a little concerned that you have a decent chunk of your trade, 20+% on this side. And then how much on this side? Yeah, only another 3. So you have about 21, 22% of it is in this losing area right here. And you only have a few percent up here. So that's tricky. This is a tricky one, Baghdadi. This is a really tricky one. Like with the sliding scale, you might be at negative expectancy. With that being said, I would suggest not doing normal position size on this. I would suggest half or third normal position size on this because of the fact that there's so much of a sliding scale. So yeah, I like the idea. Your downside strikes, that's not your worry. Your main thing is your upside strikes. So yeah. Does that make sense, Baghdadi? Yes, no? Give me a 10 in the chat. Are you here, Baghdadi? I don't even know if Baghdadi's here. He might not be here in the morning. All right. So does everybody remember how to use this? Yes, no? When you have an options trade, you put in the max loss dollar amount. Here's the max gain. dollar amount, and you put your max loss dollar amount in the trade here. Sorry, this is probability in the money. So this is the percent chance, my bad. Percent chance that you have max loss for any option, percent chance that you have max gain for any option. Then you put the dollar value in here for max loss, dollar value in here. And what it does is it will calculate, hey, if you did 100 trades like this, it will let you know whether your trade has positive or negative expectancy. So this is super, super important. Remember, we don't analyze trades on an individual trade basis and to think of like, oh, this trade is going to win tomorrow. We have to look at it from a professional's perspective. We don't know whether a trade is going to win or lose. We have no idea. If we knew that, we would risk more on the trades that we were going to win, and then the ones that we're going to lose, we're either not going to take them or we're going to risk less. But we don't know. And we don't know if any one trade has an edge over time. So this options profit calculator allows us to kind of run through the simulation over 100 trades. Hey, if you took this particular setup 100 times, would this have positive expectancy? And if that number comes out positive, then it likely has positive expectancy over time. So it not only tells us we should be taking this trade, but it also helps us reinforce the habit of thinking, hey, does this trade have positive expectancy over time? We may take a trade that has a decent chance of, say, winning, on this trade, but over time, it may lose. And so we need to learn how to build that kind of muscle and mindset in like, hey, we may take this trade and make money today, but if we do this 100 times, it's going to lose money. Case in point was that trade that I forget who it was, where they had a 20 cent, what was it? They had 20 cents credit, but they were risking $1.80 on that trade. Now, we don't look at risk to reward as two-dimensional. We don't just look at risk versus reward, because risk to reward is immaterial outside of accuracy. This trade, if it was a 99.7% accurate or something like that, or even 97% accurate, would have positive expectancy. So you would take that trade. But when we looked at the accuracy of this trade, it actually had negative expectancy. So we realized, hey, it's not worth it. Now, sometimes it will be the right trade to say, hey, let's collect 20 cents credit for $1.80 risk. If the trade is 97, 98, 99% accurate, we have to take that trade. Over 100 trades, we'll have massive positive expectancy on that. But when we looked at it and we analyzed it over 100 trades, we realized, no, this doesn't have positive expectancy. So we don't take this trade. So this is what the options profit calculator is. I worked with Vin to build that in, and we're already working with other apps to be built into the Benzinga Option School. So any questions on the option profit calculator and how this works out? Give me a 10 in the chat if there's no questions. Give me a 5 in the chat if there is. And if there is, post your question. Sweet. Just waiting for a few more. We can try one thing on the calculator. You can do it anytime you want. It's available. Just go in the tools, click on that. It's not a download. It's in the back end of the Benzinga Option School. So it's under tools right there. So yeah. How do you know your probability? It's in the trade itself. So when you go into your trade, for example, let's take a look at our SPY trade. Okay. So let's take a look at the vertical. We have a 420, 425. We're short the 420. We're buying the 425 for June 15th. Okay, so let's go into the Analyze tab. Thinkorswim, you go to SPY, and we select, you check the boxes of the option you want. So if we check this one, let's check I think it's this one right here. Okay, so let's check this one and check this one. There we go. Okay, so it'll show us the P&L for the trade. Okay, now this right here, this gold line is what we call a price slice. And what it does is as you move it, you can see that it adjusts probabilities. Hold on, we got to adjust the date on this for the 16th. Okay, so as you can see, as we move this, it adjusts these probabilities based upon the current pricing and the current Greeks, right? So if you move this over to here, this is our max loss area, right? And if we move this one over here, this is our max gain area. Okay, so based upon the current stats right now, this is saying, hey, we have 50.77% being between these two lines, and then another 34% of this line passed. So if we add that up, it's 84, almost 85% chance that we're going to make money on this one, right? And we know when we move our line like this blue line is the P&L at expiry. So we know our max gain is 570. We can see it in the box right here, 570, right? So we know we have an 84, 85% chance of making 570. So when it comes to the options profit calculator, 84, we'll go 85% and 570. That's the max profit right there. Now we go back to the thing and we look at our max loss. This is only saying a 7% chance of a max loss on this one, right? And our max loss is 930, which we can see in this blue box. 930 times 7%. So we go back to this, 7%, 930. And so this is saying we're going to, if we did this trade 100 times, over all our wins, we'll make 48.4K. And over all our losses, we'll only use 6,500. So this thing has a massive positive expectancy as is. So that's how we figure that out. Does that answer your question, Lynette? Give me a 10 in the chat if that makes sense. Yes, no? You good, Lynette? Sweet. All right, sweet. So that's how we use that. Baghdadi, we've covered your trade on this. We got a total of 2 more trades to analyze this morning. So let's see if we can crank these out in the next 8 minutes. Bear put spread Baba, 115, 113 for next Friday for $1 debit. Let's take a look at that. Are you already in this, Chica Blue? If you're already in this, you are in good shape. I mean, I don't even need to analyze it. If you're already in this, Chica Blue, then there's nothing else to do at this point. If you're not in it, I wouldn't recommend doing it because the market has already moved so far. Yeah, it's already moved quite a lot. So if you're not in this already, then I would wait. If you're in it, then just hold it at this point. If you want to, I'm not sure if Chica Blue is here, but if you want to, if you're not in it and you want to enter it, wait until the market bounces back up to, say, 115. That would be my recommendation. Oh, she is here. Okay, great. So are you in this trade, Chica Blue, or not? You're in it. Okay, then at this point, just hold it. Yeah, you're in great shape. You're already $2 past your final target. You're fine. You're good. This is a good trade. You're already $2 past your max profit. Hold it for right now. You're good. This is about to lose the weekly VWAP. On my end, on my proprietary app, which again, we want to build the proprietary app tools that I have into the Benzinga Option School backend. I'm seeing that prior to today, Baba had 2.2 million calls and 1.35 million puts. About 17% of all the options that we just talked about are expiring next Friday. And I'm seeing resistance, between 116 and 120. So from the option side. So where's 116? Yeah. So I'm seeing resistance between here and all the way up to right about here. So if it does happen to bounce and some of you are not in it and you want to get into it, wait till it bounces here and then look to reshort. Yeah. June 17th, July 7th, doesn't matter. It's the same thing. Yeah. Yeah. It's the same. Yeah, totally fine. So yeah, you're fine, Chica Blue. This is a good trade. Nicely done on this. Okay, last trade we want to analyze on the day. Long, what is 2? I don't know what that means. Jax, help me out. Actually, strike from July 17th. Jax, what is this here? What is long 2? By the way, Chica, you're on a roll right now. You've just been I think your last 10 trades, you've won almost all of them. So keep up the great work on that. You're continuing to kill it. Since you've been, in your last streak, you're just killing it. So keep it up. So Jax, what is long 2? I don't know what long 2 is on XLE. I'm having a hard time analyzing this trade. Help me out, brother. Help me out. Long 2 contracts. Okay, I don't need the position size. I need to know, is this a long or short call? Like I never need to know position size. I just need to know, is this a long call? Is it a short, long put? I don't know what this is. Like I have no idea what this trade is. So I need more details on this to analyze this trade. Yeah. And I think you're saying, hey, this is for June 17th, not for July 17th. I got that. But I need to know, is this a long call or is this a long put, Jax? On XLE. I don't know what this is. So help me out, my man. Long call. Okay. All right. So XLE, you want to buy 100 calls. So you're buying it out of the money for next Friday. Is your intention on this, Jax, to hold it all the way through to expiry? Or are you just trying to hold this for a couple days and watch your option change in value? I'm just trying to understand, because pretty out of the money. Like you're $8 out of the money. And so I'm trying to understand on this trade here for June 17th. Yeah, it's a 5 delta trade. It's a very, very low probability trade. So I'm just trying to understand on this, Jax. Are you trying to get like a super cheap call and then like have it double in value, or do you actually want to hold this to expiry? So what's your intention on this, Jax? Remember, I generally do not recommend buying deep out of the money calls as a whole. I don't remember, Jax, which one it is. So just type it in. Do you want to hold till expiry, or do you just want a short-term profit? Help me out, brother. Help me out. Yeah, I just want to point out a couple of details on this. 5 delta, 2 gamma, 3 theta. So hold till expiry or hold till as much as possible profits. Okay, here's the challenge I see in this, Jax. This is the problem, is that, so you have a 5 delta, you have a 2 gamma, and you have a 3-cent theta on this. Yeah, I get you're very bullish if you're buying it deep out of the money. I got that part. Okay, so let's say you pay 10 cents for this. You're very bullish on XLE till next Friday, okay? So let's assume that, you want to hold through the weekend. You're going to eat 3 cents today, 3 cents Friday, and this is if theta stays stable, which it probably won't, but 3 cents Thursday, Friday, Saturday, Sunday, Monday. That's 15 cents. Meanwhile, you would need XLE to go up at least $3 just to neutralize the theta decay. And keep in mind, theta is probably not going to stay at 3 cents as we go into the weekend. It's probably going to increase to 4 cents, maybe 5 cents. So in actuality, you need XLE just to go $3 from the current price just to neutralize all your theta decay if you hold it through tomorrow. So remember, I do not recommend buying a whole lot of deep out of the money calls. They're very low profit. They don't make that much. And there's very little convexity right now in terms of call pricing right now. There's very little skew to the calls right now. And remember, you only have a 2-cent gamma. So it's only adding to the delta 2 cents for each pop. So for every dollar move, you're only adding 2 cents to the delta. So I look at this and I'm like, this is a low probability trade that's going to continue to eat more and more theta going on. I get that you're really bullish. If you're really bullish, then just buy the at the money calls. If you really are bullish from the current prices, buy the at the money and watch those rip. You're going to get, your theta is 4 times this, but your delta is almost 10 times this. So, and your gamma is 4 times. So if you think about it, for every dollar move, let's say it only moves $1 today, you're going to gain 54 cents on this option, and you're only going to pay 12 cents in theta. So you're going to gain 42 cents for a $1 move, whereas this you're only going to gain 4 cents. So to me, if you really are bullish, buy the at the monies. If you think the current price is good, buy that. Don't buy the deep out of the money. So that's my recommendation on that, Jax. Again, as a whole, you generally do not want to be buying deep out of the money calls. if you can see that there's a really good skew on the call side and that there's potential for massive convexity, okay, something to consider. But you have very low vega, like you would need like a 50-point jump in implied volatility just to get an extra 50 cents from the Vegas and IV going up. And this Vega is going to get smaller and smaller. So I look at that and I feel like, yeah, I would pass on this one, Jax. I would pass on this one. Or if you really are bullish, then buy the at the monies. Don't buy the deep out of the money. What is convexity? So when you buy shares, let's say you buy 1,000 shares, for every dollar it goes up, your thing only goes up $1,000. So there's no convexity there. The profit is a slope of 1. For every dollar it goes up, you gain $1,000. A dollar goes up, you gain $1,000. There's no slope, there's no convexity or anything like that. With options, there is convexity. When you're long calls, let's say you're long at a 50 delta. Yeah, the first dollar it moves, it goes up 50 deltas plus the gamma, but your deltas get bigger over time and every dollar that moves. So if we go up $3, your delta could be 60 or 70 or 80. What that means is that your profit potential increases. This is convexity. So yes, linear, well, not necessarily parabolic. It doesn't have to be parabolic. They're not quite the same. Convexity does not have to be parabolic. It can be like that. So it's important to understand they're not equivalent mathematically. Parabolic and convexity is not the same. Yeah, necessarily. Because by the time you get to this portion of it, you could be at a delta 1 position. So it just depends on how high or low the deltas are. But the convexity on long calls, remember, long calls make money via delta, gamma, and IV going up. So if you look at it like that, you have, if you're buying a low or mid-range delta, well, then you have a chance for the prices to gain over time. If you buy a high delta, you have very little convexity to it because it can only go from 90 to 100 or 1 delta. So yeah, that's convexity. And the only reason why you'd be doing deep out of the money calls is if the skew is really positive towards calls and there's a chance for these, 5 deltas to increase to like a 50 delta really fast. How would it do that? Through high gamma. And also implied volatility would really help the whole position. But if you have high gamma, then there's a potential for that. But yeah, so hopefully that makes sense. Okay, so we've hit the 1 hour mark on this. Very good session this morning. Got a new trade on UNG. By the way, what did we say UNG was going to do? We said UNG is going to keep going up. We bought it 28.66, and our trade has literally not gone in the negative. We bought it literally. Let's find out where we bought the damn trade. So UNG 7:38. Okay, so that's Pacific time. So where is 7:38? Right here. Okay, so we bought it on, boom. Let's do this. So this is our candle that we bought right here. We went at best maybe 10 cents negative. So we bought it here, maybe 10 cents, whatever. And within 1, 2, 3, 4, 5, 6 minutes, we were already profitable and we've never gone in the negative since. We said, hey, we analyzed the price section in real time. This looks bullish. It didn't even come back to our entry on the pullback. And now we're at 30.25. So this is our, this short trade is already up $1.60 in less than an hour and a half. So just to show you the potential of what we can do here. So UNG trade is good. I've seen no signs of the slowing down in the price section, so we're not ready to sell the calls yet. We will sell the calls in a little bit, but only until we see the intraday price section slowing down. So that's pretty much it. Closed our SPY trade for full profit. Took our PBR trade for a minor profit or minor loss. UNG has already recovered pretty much our PBR trade, and everything else is continuing to clock in our favor. So very good session today. Very good trade ideas, everybody there, especially the Abbott trade on that. Chica Blue, nice job on your trade. So very nice work, Chica Blue. You're just continuing the hot streak. So with that being said, have a great break, everybody. Today's second class in a couple hours from now will be on market gamma, how option dealers and market makers hedge, and how that influences the positioning, the order flows, and the price changes that we see on a day-by-day basis. So that will be our second class today. We hope to see you for that. Other than that, have a good 2 hour break, and I will see you guys for the next class. Take care, everyone.
All right, everybody. That was a pretty intense session there. For those that are asking what was the class there, the class from today is market gamma and building strategies. So basically, Chris Capri, this is one of the 8 chapters. So this is the live class for today. But there's another class, there's another session, and it's from 2 to 4 p.m. Eastern. So that's basically at the end of the day. So the other thing, is where you can find the recordings. So just click on video library, and it's basically going to take you straight there. I need to log in here first, though. All right, so you see, we are in the chat room here. So this is where the live trades happen. There's a student trade idea chat room where basically all the students are posting their trade ideas. You have questions for Chris. So if you do have a question for Chris, you can actually go in there and, ask any question that you have, right, regarding options and all that stuff. And keep in mind, we do have a Q&A session, also live Q&A session, but this is a chat room, maybe in case you were not able to attend the live session that was there, that he does every day for all the classes, right? General discussions, if you do want to have, general discussions right there. Community support, class files. This is where you're going to find some really interesting stuff there that Chris does. There is a trade alert that goes out every Sunday, right? This is aside from what you get on Chris Trade Ideas chat room. In that chat room, you get his exact entries, exits right there. He just closed the SPY strangle for max profit. I mean, who says that you can't learn and earn at the same time, right? And really, the option school is, it's just, living proof, right? That even if you're learning to trade, right, you can also make some money on the way, right? And that's the total opposite of how most people start, which is like they learn by blowing up their accounts and stuff like that, right? So I'm telling you, it's the best way to start. I wish I would have started with this, but right. So there you have Chris Capri's, the chat rooms and all that stuff. Video library, that's, really if you want to like get the recordings or anything like that of the prior sessions. So I don't know what's going on with this login, but there you go. All right, so video library, you see all of the recordings right here. Combining options with price action, that was the Q&A from yesterday. 3 and 4 legged option strategies, single leg, 2-legged, option volatility. That is my favorite class. This is one of my favorite. So that one, I'll tell you the other one. But let's go over all the chapters so you get a sense, right? So option volatility, introduction to options, market gamma, and how to build your own option strategies, right? And let's see, combining options with price action, understanding option Greeks, introduction to options. And you always have office hours on Friday, right? Keep that in mind. So, right. So in chapter 8, so the 2 of my favorite classes, right? Chapter 8, market gamma and how to build your own option strategies. This is great if, let's say, maybe you have a full-time job and maybe you want to like set up your trades in a way that like you don't have to be trading the tick to tick or the day to day. You can literally just set up your own portfolio with the same strategy. So that's really a cool thing about that. And let's see what else we can find here. So that's where you can find all of the recordings, right? The other stuff is, we're talking about a tool that Chris Capri was showing. So right here, if you just go to the header on the top right, you can see, you just put your mouse over this and it says 100x options calculator, right? You open it and you start inputting the numbers there, right? And keep in mind, Chris can help you kind of finesse this tool, like how to use it, right? How to use it properly. So this is a tool that's proprietary here to the Benzinga Option School. And it's just like Chris said, it's one of many. There's a lot of stuff that's in the pipeline. And there's always stuff in the pipeline. That's just, how it is. But, things are getting pushed out, right? So this new tool is pretty cool. And there's more stuff that's coming. Again, this is just for the Option School members, right? That's why you find it here in the Option School tab. Okay, so dashboard. Something wrong with my internet, but okay. So that's where you get everything from the trading school. Keep in mind, there's another class at 2 p.m. Eastern. So for those folks that did join for the trial, the 7 days for $7, make sure that you go to that class at 2 p.m. It's going to be very important. Q&A session, right? And also about the same chapter, right? Today, which is market gamma, that sort of stuff. So I think with this, we pretty much covered everything in the option school. If you guys want to join this community, be part of this great team, right, of traders and people that are trading together, working together, feel free to join us. We definitely work together as a team, and that's really good. It'll definitely change the way you look at trading instead of doing it by yourself, if that's what you're doing right now. And it's just good to start with the education. So it also comes with Benzinga Pro. You can do your charting, research, all that sort of stuff there. So I'm going to leave the contact there on the Twitter space. You guys have it, like you'll see it there on the chat, on the Twitter space thing. You just click on it, $7 for 7 days. If you want to continue with the team, it's $14.97 for the year with Chris Capri, right? You're going to be trading with Chris Capri, learning with Chris Capri. It's going to be an experience for you, right? And also you get Pro for free, basically. So I think that covers everything, guys. I'll leave my email if you guys want to contact me. Alicia, I did get your email. I'll get to it really, once we're done here and we wrap up. So, all right, I think that covers everything, guys. You can contact me by email. I look forward to seeing you guys in the 4 p.m. In the 2 p.m. class, 2 p.m. Eastern. It's going to be pretty interesting, and we're going to, look over a couple things there. So thanks a lot for joining, guys, and we'll see you soon here.